RealAgriculture.com's coverage of the 2011 National Cattlemen's Beef Association meeting is brought to you by Haney Farms and Elanco Animal Health. Okay, Duane, so there's a lot of people that are very bullish for 2011. Are we too bullish in your mind?
Oh, I don't know if we're too bullish. You know, we're probably maybe getting a little bit overheated on the weather right now.
Right.
You know, got a lot of good reasons to be optimistic. Supplies are down, demand's coming up, both domestically in North America as well as worldwide markets. So you put those two factors together, and it certainly suggests higher prices. Now, whether or not we can get to what the back end of the board is suggesting, $1.20 plus, you know, you hate to count on that. The trend's probably higher. We're probably moving into a higher trading range.
Would you agree, though, that this year in Canada and the U.S. it's setting up better for the cow-calf guy than it is the feedlot producer?
Yeah. You know, the cow-calf guy is going to get rewarded for short supplies. We have, again, the tighter numbers. Our feedlot capacity, though, is still the same. We haven't shrunk that. So as these feedlots get in here and compete for these tighter supplies, they're going to have to compete with each other and pay up, which is going to reward the cow-calf producer.
So is this year, though, that we're maybe going to start to see some heifers being held back? Is this the year?
Yeah.
What will it if it doesn't happen this year, what's it going to take?
You know, higher prices probably, and you know, this year whether or not we'll be high enough, we'll see. It's interesting. Last month in Califax data, for the first time, we did see a pickup in heifers not getting placed into feedlots. In other words, staying outside. So maybe we're just on the cusp of a trend. Now, to see that happen, though, we're going to have some water in places around the country that are dry.
Right. Okay. So when we do look at fat cattle prices, like what can we expect? Is this rise going to continue, or are we going to have maybe some corrections throughout the year?
Oh, we do. Yeah, gravity will take hold at some point. I guess we're thinking that we're in a better trading range, but you still have risk under $1 on the low side, you know, maybe 98 to $1 on the low side. Our upper side, in our minds, are close to $1.15. So that's a basic range that we're looking at.
Okay. So I guess one of the questions that everyone's been talking about, you know, RCAP's been really talking about, is trying to get speculators out of the market. You know, you're an analyst, you look at a lot of fundamentals, but you also look at some of the other stuff that's happening. We need speculators in the market, don't we?
We like them because it provides liquidity, and right now they're in buying the market, so that's giving us the opportunity to lay off some of this huge risk that we have in the marketplace. You know, I guess the other side is with the big premiums in the board, that's why guys are paying more for feeder cattle and calves.
Yeah.
But then that becomes a cow-calf producer's friend as well.
Right, so when we have so much, the market's lofty, how hard, is it not? It's almost becoming impossible as the feed yard sells out the inventory, and money's being made definitely in this turn. Replacing those it's a real stressful point right now for feed yard operators.
It really is. It's really hard to buy these cattle with corn prices the way it is, grain prices the way they are, and lock in any kind of profit. You know, right now most guys will tell you if they can lock in anything, it's a $30, $40 head loser at best.
Right.
So it's difficult.
Yeah, and I think that's one of the real issues, is that you know, I think people are getting more progressive on, you know, forward contracting, locking in, and you know, providing risk management to their operation. But this, you know, in Canada, this turn's been very profitable for the producer. I hope it doesn't teach, or sort of people don't get in their mind, hey, you know what, maybe I should leave less unlocked because you know, I could have made more money.
Yeah, that would be the kiss of death. We're going to get into that. You know, guys that are hedged now aren't liking it that well. Even though the basis has been okay, we're getting some money. We left a lot of money on the table by hedging.
Right.
You know, common human sense will tell you next time I'm not going to get in that trap. I'm going to leave these cattle open. The futures market and the cash market probably underperform, and we'll be stuck again. You know, we'll have to see how that all plays out through the course of the year.
Yeah, for sure. Well, Duane, thanks a lot, and have a good NCBA 2011.
John, thanks for stopping by.